Hello and welcome to Rajya Sabha Television with me, Frank Pereira. Well, despite the possibility of growth being impacted due to the crippling cash crunch since the currency ban, the Reserve Bank of India left the main repo interest rate unchanged at 6.25% to keep inflation in check. Most analysts expected a rate cut of 25 basis points to 6%. However, banks got a major liquidity boost with the central bank withdrawing the 100% incremental cash reserve ratio or CRR requirement, which was imposed on November 26th. The RBI also forecast inflation to be around 5% for the fourth quarter of FY17, stating that some of the price reduction resulting out of demonetisation could be temporary. On this edition of The Big Picture, we'll discuss the RBI's first monetary policy review after the currency ban. Joining me on the program today are Renu, former staff member, RBI and International Monetary Fund; Rajesh Mahapatra, executive editor of the Hindustan Times; and Professor N.R. Bhanumurthy, National Institute of Public Finance and Policy. Ms. Kohli, several economists, thought it was a foregone conclusion that there would be a repo rate cut today, but that did not happen. It was quite contrary as far as Urjit Patel was concerned. He said that it's going to remain the same and there's not going to be any change in repo rate. Were you one of those economists who were surprised?
A little bit, and I'll explain why. There were a minority, about 4 economists as per a Reuters poll, who did not expect any change. I think I can appreciate their concerns on inflation because there's not much, there is this oil price risk as they've spelled out. There are food prices, wheat and cereals, which are going up, and there is a certain hardening, and then the rupee is going down. It's weakening. So, from those perspectives, I think I can appreciate the risks to inflation, and I do not have much of a, one can, perhaps, it makes sense for them to wait for a while and for the next few data points to come in before revising their inflation projections. In my view, the ones on growth are too optimistic because they have revised down growth forecast only 50 basis points from 7.6 to 7.1. And of that, as it was explained at the post-policy conference, 35 BPS is actually due to on account of the growth in the first half. So that is realized, and we know that, we know the data, and we know how what the hit is. 15 basis point is all that they're expecting the hurt to growth on account of demonetization, which they call the special bank notes effect. Now, that to me seems very optimistic. It is at quite at variance with what anecdotal evidence that we are seeing, some kind of early indications that have come in. And it's also quite much at variance from the private forecasters who, if one were to take a kind of a rough average, pretty much on average, they are all expecting about growth to be 16-17 growth to be 6.5%. So if we remove the 35 BPS and in the second half of the year, it's just 15 BPS, that means the Reserve Bank's view is that of a minimal, it is their growth and inflation outlook is consistent with minimal damage to the economy on account of this, that is not much disruption. So one view can be on this that perhaps they are expecting to remonetize very quickly. We do not know. They did not say how fast enough. But I assume, obviously they have more information on this than we do. But in my view, it is too optimistic, and I think going ahead, perhaps there may be further revisions in that.
Yep. We'll talk about growth in detail in just a bit. Let's get the repo rate out of the way first. The explanation or the reasons given by Urjit Patel for ensuring that the repo rate remains unchanged, are those reasons valid, Rajesh?
I think prima facie it looks like a sensible decision. I'm happy that at least in this respect, there were expectations from the government, and there would have been expectations from the government for lowering of interest rates. And it appears that the RBI has chosen to be guided by other macroeconomic indicators for its decision. What I take away from here is that they clearly say that the reduction in inflation rate would be temporary, 10 to 15 basis points of easing. And that's so demonetization is not addressing the root causes, and the root causes are very much there, alive and kicking. And so therefore they fear that the inflationary pressures are good enough not to guide for a repo rate reduction. And as Renu said, we are also seeing some upward trend in oil prices. But the RBI also has cited, or at least one of the things that seems to be bearing on their decision is a likely or much expected hike in the US Fed rate. Now, I would think that has already been factored in, and there wasn't much room to again sort of say that that could be one of the things that has. So I would take that the RBI has been purely guided by what it sees on the inflation front to have held the repo rate where it is today. So, and I think it's a sensible decision.
Professor Bhanumurthy, there was some relief as far as the banks were concerned because the incremental CRR has now been withdrawn. So that's a big relief for the banks.
Yeah, I think today's policy should be looked at from that point of view. I mean, when they say that they're going to be more accommodative towards growth, today's policy, in my view, although it's partially surprised, what they did is that they allowed the banking industry. I mean, I think the banks is really in a dire state of situation now. There's a lot of uncertainty because of the demonetization. Now you say that all this becomes incremental CRR, and the cost of banking sector is increasing over a period of time. And I think that's one of the reasons why the central bank came with this incremental CRR. And now we are going to see that from December 10th onwards is going to be shifting to the MSS, Market Stabilization Fund, where the banks are not going to lose much out of it. So in that sense, today's policy, if you look at it, the major policies decision is on the removal of incremental CRR. I think it's coming from the 10th December, which will give some kind of a boost for the banking industry per se, and it should help bank balance sheets also to improve to some extent.
Is the onus now on the banks, Ms. Kohli, to ensure that the rates are cut? Because what are the banks going to do with all this money that is coming to their vaults?
Yes, I think the pause on the repo rate can perhaps temporarily be also justified on that account, because let's not forget that the past reductions in the policy rate, the Qs, have not been picked up by the banks, and so therefore there is greater scope for transmission, which should certainly be helped by the enormous liquidity that has come into the banking system all of a sudden because of the demonetization. So perhaps they have the time or the latitude to wait a bit for another 2 months or thing and see how the scenario unfolds as far as growth and inflation are concerned. I think the major contribution of this policy in alleviating some of the uncertainty is regarding dispelling any kind of expectations that there is going to be a windfall gain for the government on account of liabilities, reduced liabilities because of currency with the public to the central bank's balance sheet. And the Reserve Bank made it very clear that their liability does not get extinguished because it still owes that by virtue of the fact that those notes have been printed and a promise has been made. And so I think what comes next. The general expectation was that there would be a windfall gain, and therefore there would be growth would be pushed by public investment, enhancement of which will come from this windfall gain. Now that's not going to be there. So the focus now for what is going to drive growth ahead, given that consumption will be temporarily hit. I mean, as per Reserve Bank's calculations currently, as what we have seen today, they're expecting a very sharp rebound, almost a V-shape. Very quick rebound.
Yes.
So, which is a bit surprising considering that evidence on consumption demand that we are seeing is quite severe as of now. But pausing upon that, what comes next? Now the focus will obviously on what are the tax disclosures and the taxation gains to the government from this income disclosure scheme. Yesterday, the government has said that they're expecting somewhere between 1.3 to 1.5 lakh crores. Of which that means if the upper bound is realized, then the government gets about 75,000 crores of increased tax revenues. Now we have to see what actually materializes, how much of it does, and in the forthcoming budget, what is the outlay on public spending, and I think that's where the focus comes in now.
Can I just add to that? I think that's one side of the story. I mean, if you have to really look at now that the growth is going to be decelerating, I mean, RBI has said 7.1, which is slightly optimistic in our view. It should be close to 6.5%. So if given that kind of situation, it will have a dent on the revenues also. I mean, it should obviously have a dent on the revenues. And the other thing that we need to really take into consideration is the cost of MSS itself. That should be financed by the budget.
Yes.
So if you take all these things, the net gain, in my view, is not going to be very substantial in the overall exercise.
Indeed, indeed. 55,000 crores, I think, is someone who said that this entire exercise is going to cost. Rajesh, you know, several people, SBI has said that, you know, they're expecting 13 lakh crores to come back into the system as a result of this demonetization exercise. The Revenue Secretary has already said that all the notes are going to come back to the banks.
Absolutely.
So
He heard our panel discussion last time.
so I mean, so where is the windfall gain? It looks like it's going to be a loss to the exchequer.
Look, there is a reason why Prime Minister Modi is no longer talking about black money. He's talking about a cashless society. Because if you look at demonetization, the top objective was it will curb black money. And one of the assumptions, and even though the debate about whether RBI's liability gets reduced and what happens, Finance Minister Arun Jaitley on record said that there is a way to look at constructively using that money if certain amount of money doesn't come into the system and amounts to a reduction in RBI's liability. So those were expectations. Now today we have to read RBI's policy in conjunction with what Hasmukh Adhia has said. So he's saying now we expect all the money to come back. So that first objective or the rationale or the justification or the reasoning that was cited is gone. The second rationale that was cited was this will help lower interest rates and therefore will facilitate growth. Now you got RBI stance today that there is fear of inflation and we will not change repo rate. You, Mr. Bhanumurthy talked about how you know, there may have been by doing away with the incremental CRR, you may have taken some banking cost off, but also the liquidity may push banks to lower the cost because they are holding cost lower the rates because their holding cost comes down.
Yes.
I'm not very sure. I mean, I think nobody is talking about in these 2 months, there are also costs that the banking system has incurred because they have done nothing in these 2 months but handle the cash chaos. Okay? And that has a bearing on the bank's productivity, output, and the output of the overall financial system.
And that estimate is at 55,000 crore rupees.
That's what he said.
I mean, we don't know how we are reaching this estimate. It could be more, higher. So, I mean, you know, without getting into these nitty-gritty details, in broader terms, everything that was sort of put as a right box to tick, and you ticked it when you went out with demonetization, is coming around the circle, right? I mean, there is nothing that is coming out of it. So, in the event, what you have ended up with lower GDP growth forecasts. You have ended up with humongous inconvenience that you have caused to people across the country. As we speak, it is now beginning to unfold in the rural countryside. Now we are getting reports, you know, in the first 15-20 days, it really didn't affect the rural countryside. Now we are getting reports how people are going back, you know, migrant laborers are back, they are without jobs. It's all, you know, beginning to unfold. So I don't know whether this exercise was really worth it. And today, if you look at the RBI policy, they hold the repo rate. They talked rightly that there would be temporary reduction in inflation rate. They talk rightly about you know, how this is going to affect growth. Renu pointed out that, you know, it could be still more still optimistic view. Okay, so but the fact of the matter that they're acknowledging that, you know, growth will be hampered. But
where is this growth going to come from?
At the same time, at the end, they are concluding, no, demonetization was a good move. So I'm really confused because, you know, RBI, it's an autonomous body. You would expect RBI to come out and make a statement as it reads the situation.
Indeed,
I think this has been disappointing that, you know, at the end of doing all that, then they are saying, no, we still stand by demonetization.
No,
Indeed,
I think, to be fair to RBI, I mean, the RBI monetary policy, I'm sure Renu knows much better than me, the RBI monetary policy is always forward-looking. Given the current uncertainty, not just in the domestic economy, that's what they write it in the last paragraph.
Yes.
The heightened uncertainty in the domestic economy, because not many, we don't know what's happening. We don't know the outcomes of it. We have been talking about many things about demonetization almost like an astrologers. I mean, we don't have any facts to really back up the kind of statement that we make. And that's exactly what RBI is saying. In addition to this domestic uncertainty, there is also external uncertainty that is coming out from many of the industrialized countries. We also have to see how this, although markets have discounted this US interest rate hike, but I don't think it has actually got into the policy rates. Given that kind of situation, and we also saw that 7.5 billion going outside the system, exchange rate has hit the upper level.
Yes.
I'm sure there must have been some kind of intervention in the foreign exchange market. We don't know immediately. Given this kind of an uncertainty, RBI seems to have taken a pause. But otherwise, I would have expected if there was no demonetization.
A wait and watch approach for the time being.
I think that's exactly that they're looking at.
Ms. Kohli, as far as demand is concerned, there is no demand and these banks have got so much of liquidity now. How are they going to ensure that there is demand? How are they going to ensure that this money really goes out of the banks?
Well, to an extent, it will go out because currently demand for currency itself is repressed. There are limits and there are withdrawal limits, and each one of us is affected in each specific way, but particularly businesses whose withdrawals have been curtailed for the purpose of executing production and other transactions. That will resume, and already some bankers are saying at least what they had seen earlier. At least what is coming in is at least withdrawals are also taking place. So to an extent, we should see a pickup in velocity of money. There's also uncertainty as to how much will eventually be released back into the system, because the finance minister also said that we will not have the same kind of replacement currency. So, and there has been speculation about a lower currency to GDP ratio than before. It was about 12%, between 11 to 12% earlier. So we do not know about those are uncertainties on that side. So coming back to the banks and demand for credit, there wasn't much demand for credit anyway. It had reached to historical lows, and each month it is decelerating. The large industry, small as well as medium. Whatever lending was taking place was actually on the retail side. Retail loans on account of vehicle sales, for vehicle purchase of vehicles, and housing loans were actually driving whatever bit of credit demand that was there with the banks. I'm afraid that has got dented right now. The Reserve Bank's view is that this is a very temporary effect and demand should rebound. I'm not so sure about that. We have to wait and see how it unfolds. The Reserve Bank also says that the second channel of hit to consumer demand, which again affects the demand for loans, is from the wealth effect. They expect a very limited wealth effect, adverse wealth effect to be very limited, and they think that it will rebound back very shortly. So, that has to feed back into demand for credit. Ultimately, banks they can only push loans to the extent by offering enticing interest rates and, good kind of a package on, lowering transaction fees or things like that. But beyond that, it is the customers who have to come and ask for loans.
Indeed, and let's not forget that the banks also have to pay the 4% on savings accounts that that people have their money banked in the bank. So that money also has to go out. So let's move on now, Professor Bhanumurthy, and talk about the immediate impact of all of this. The short-term impact, the mid-term impact, and then the long-term impact. What kind of an impact is it really going to have?
No, I think that's exactly I told you. I mean, there's so much of uncertainty to really make an assessment on impact on different time horizon. I think we will have much more clarity by end of this December, when we know that this exchanging of notes are going to, at least exchanging of notes, the old notes are going to be stopped. So if that, I think by then we will come to know, as Renu has already pointed out, we come to know what is the currency to GDP demand. That kind of issues will come up. And again, it all depends on how fast the banking sector, the RBI, will smoothen this currency demand situation. Right now what we are facing is, it's not really meant for transactionary demand. I think many of us would like to hold the cash because of the precautionary purposes. The precautionary demand was never been there. So right now, once we don't see the smoothening of this banking transactions, the precautionary demand would definitely be there. And I think that will create disturbance in the overall demand situation in the short-term market.
Indeed, indeed. And, Rajesh, from the first discussion that we had together, we were always questioning this entire demonetization move and what kind of an impact really it's going to have on the informal sector. Now, you know, that sector has been very badly hit and growth on that sector has come to a grinding halt. Do you see any kind of a revival of that sector in the near future?
No, I mean, as of now, I agree with the other two panelists that you are not getting a clear picture. You are not getting a clear picture, and you know that's how a central bank behaves. You know, if central banks looks at a scenario that is uncertain, it would rather hold on to status quo, and that's what RBI has done. And as far as the government is concerned, of everything that they're talking now, there is nothing to indicate. You know, so what are they talking about? They have moved on to talking about how to come down on people who may have violated tax laws, right? We are now seeing another set of figures that are being thrown up, 1.2 to 1.3 lakh crore. I am really not sure. I'm really not sure because you see, out of the 67,000 crore that you said were disclosed under the IDS scheme, we have two big ticket items, 13,000 crore and 10,000 crore, which have now been declared null and invalid, right? So which means the net disclosure under that is 46, would it be 46? 42,000 crore. Okay, so on 42,000 crore disclosure, you know, the VDIA scheme had 33,000 disclosure 20 years ago. So if I just put together an inflation number, this has been a quarter successful of compared to VDIAs. So you really haven't netted much. Okay, now you're talking about 1.3 lakh crore, and these are all, you know, under the IDS, these are 4 installments, I believe, 4 installments payment. So all of that you don't net in this fiscal, right? And if you now go after, let's say 1.2, 1.3, let's give it, you know, sense that, okay, a lakh crore. But the tax money on that is not going to come in at one go. So we have to wait and see, because anything that has to happen now will happen in the budget probably.
Yes.
And the budget is in the first week of February, and they all have already gotten into the budget mold.
No, you spoke about clarity. You spoke about clarity. Isn't it the central bank's duty to give us some kind of clarity, because it is the central bank scheme, and you know the people too are clueless about when this limit is going to go up. There have been 36 notifications thus far. Almost on a daily basis, there is a new notification giving you a new rule and regulation. So even the public is very confused by all of this.
Yeah, it doesn't help. It doesn't help. And the Reserve Bank of India should know better that not having clarity and coming up with these frequent notifications only harm, you know, the sentiments and how people perceive it. Now, he talked about precautionary demand for cash. All of us are nervous. All of us are hoarding cash. Because we don't know. Yeah, I mean, you know, look, I think, you know, it has been done to death. Now, everybody is more or less convinced that we messed up. We messed up, we didn't do our homework. The intent might have been there, but the way we have gone about doing it probably was bad. But I would say, you know, it's not just good enough to say that the intent was good. The intent has to be backed up by sound logic. And I wish I had this quote from IG Patel to read out. In 1978, when he was the governor, he stood up and said how this was such a wasteful exercise. And 1978 was a very different scenario. You know, these monies accounted for 0.6% in public, you know. It really didn't. Today, your 500 rupees 500 is your new rupees 100. Please understand. And the share of cash in black economy, everybody knows it, everybody understands it, is minimal. So, you know, look, I mean, you got to say it. You know, there is no economics behind it. If this was done for optics, I don't know whether those the intended results of optics have come about.
Let's hear from the economist now and see if it is still too early to say that it was a blunder, or was it a blunder and now corrective measures need to be taken?
I think the disruption to economic activity is where the focus ought to be, and in that light, proper assessments and a bit of forward looking, I do find that the Reserve Bank has taken a kind of a very optimistic view on growth, and I think, or the converse of it is the disruption. They expect it to be very temporary. But if one just looks, if we were to just consider the state of the economy as in November as it stood, then one should not ignore the fact that in the previous quarter, or rather in the for the last couple of years, it's only consumption demand which has been driving growth. Investment has been weak, and in particular in the last 3 quarters it was actually negative, and the pace of that was accelerating. The deceleration was so in that light, and then if you break up the investment profile on the production side, then you can see that both private corporate sector balance sheets are very laden with debt. There's a huge debt overhang. Their deleveraging is very slow, and that is mirrored in the banking sector, whose balance sheets are equally weakened. They're inadequately capitalized. They've got a huge burden of NPAs, and resolution of which is proving difficult and very, very slow. It's unmoving. So, this is a kind of a fragile balance sheets of corporates and banks that we have at that point in time. And when a financial shock of this nature hits, then obviously the disruption can be more damaging than it would be in the event that your balance sheet is healthy. It's like your body.
Indeed.
So how much weight can a tree bear? So I think if I look at it at the state of the economy, then going ahead, that's what is important.
Very well put, and you really summed it up for us. But Professor Bhanumurthy, we come to the end of the program. Final comments from you in 30 seconds. Your closing thoughts.
Well, I think these are uncertain times. I do hope that this uncertainty will go off within a quarter or so. My guess is that come 2017, we will have a much better perception of the Indian economy.
Okay, wait and watch, just like the RBI did. We should also wait and watch and see what really happens in the year to come. Thank you so much, my panelists, for joining me on my program today and putting things into perspective for us. That's all the time we have on this edition of The Big Picture. Thank you so much for watching.